All right, hello, First Step Financial Services, MLOs. It's exciting to speak to you today. I'm talking to you about how to build a solid pipeline. My name is Jamel Wilmore. I'm one of the head mortgage loan originators here. And we're going to get into the different mix of loans that you can have and how you go about getting those and how you build your business. So the deal mix that we have, there's quite a few that we're going to talk about today, but our bread and butter where we start everything with how we're built to really handle is the double dip deals. These are deals where you are both the real estate agent and the mortgage loan originator. Coming up next, mortgage loan originator only deals where you are servicing a referral for someone else, working for your realtor partners as just their loan officer, loan originator. 3, refinance deals, the gift that keeps on giving. I absolutely love the refi deals. It's something that's always going to keep you moving, and this can happen in high interest rate climates, and it definitely happens in a lower interest rate climate as well. You just got to be able to have the right conversations. Investor purchases, hard money, short-term loans, investors, investor refinance. It's a beautiful way to get out of that last set of loans that we talked about as well. So we're going to get into each one of these. We're going to dive a little bit deeper into each one of these styles of deals. And if you can get one of each one of these at any given time, you're going to have a very, very healthy pipeline. But you want to have multiple from each one, closing as many deals as you can on a monthly basis. The double dip deal. Jonathan brought this to me of 3 to 4 years ago when I first became a mortgage loan originator, and I had no clue. But thank you so much. This is why we're all here. We're going to learn how to build a pipeline full of these deals. It is the bread and butter. It's what we do here. We're set up so well for this. A lot of people have an issue talking this through, but you really shouldn't. You are so well integrated into the process as the realtor and also now the mortgage loan originator. You really know how to negotiate with the other side. It really makes things easy if you just put the right glasses on and have the correct conversations with people. It's why we're here. Is it legal? Yes. For the DMV where we are, all 3 regulatory commissions have stated that it is okay to be both the realtor and the mortgage loan originator as long as it's fully disclosed to your client that they do have the option to shop for the mortgage side of things. So just rest assured that it is okay. It is different, but it is okay. It's not a conflict of interest. Um, it just isn't. Those are 2 separate things, and you're doing both of them at the same time. But knowing someone's finances allows you to ethically go forward and get them the best deal that you can on the front end with you being the realtor as well. How do you do this? You have to have the conversation up front and be confident that we have a strong team behind us that's going to stand on that. When somebody asks, do you have the time to do both? I have the time to manage both. However, we do have a team here, and this is a big thing. It's the team, the team, the team. We have a team of people here that are working on what we're doing. So the team goes behind, make sure all documents are there. They do the loan workup, and they give us a full report of where we are and what we need to do. At that point, you're going back to what you've already been doing, which is being the mortgage loan originator. I mean, being the realtor and going and getting a deal under contract. From there, we've got a processing team that takes it from contract to close. So you just need to be able to exude the confidence that everybody you have involved in this process is going to make this as seamless as possible. And you also have the ability to tap in and make sure things go the way that they're supposed to. So as you start to build your business and people see that you're closing both sides of things, people are going to ask questions. Other realtors are going to ask questions. And as you start to build trust with people, you will start to get realtor referrals. And this is when your business is in a growth phase, when you're not just killing what you can eat or eating what you can kill, but you're also starting to show that you're good at what you're doing and being able to service others. So people need to, one, see you do it. So you're not really going to get to other people trusting you with their clients until you can build trust amongst your own clients. So you have to put in that groundwork to be able to get through the double dip phase and get consistent with that so people see you doing both and they see you doing both well and both often. This is when you're in business, when you're starting to receive business from others. One of the biggest things that you can do in business alone, but definitely when you hold a license, a similar license to someone who's going to refer you, is to build trust. How do you build that trust? So for me, I like to have an open conversation. I like to set an actual time and have a either Zoom or FaceTime or phone conversation with the potential client and with the referring realtor so that we can make it known that we both do have a license. However, in this capacity and how you know me is as a mortgage loan originator, and that's the only way that we're going to engage from here on. The person who referred you is my real estate counterpart, and I won't answer any real estate questions regarding this transaction or any other transaction. I'm always going to refer you back to my teammate. And someone hearing that is definitely going to build trust. I even go as far as when I save their name in the phone, I also tag it with referring realtor's name, mortgage referral, so that at any time I always know that this person circles back to them and there's never any lines blurred. So that's how I do that. And at this point, it's definitely not a conflict when you're only engaging in a mortgage originator capacity. So that's you just wear one hat in this situation. You need to make it very clear that the realtor hat is your realtor counterpart. And then from there, that's how you do that. Now, how do you build this line? You need to speak with realtors. Um, you can always, I like to reach out to the listing agents of deals that I've closed on a double dip and on the back end, let them know, hey, how do you feel the process went with the loan team and my buyer's loan? Oh, it went well. We closed early. We closed on time. We did what we were supposed to do. Great. One thing you may not have known is that I'm actually the mortgage loan originator, and I would love to service your clients. And then you'll get a question like, whoa, I mean, you were the mortgage? Yes, I was the mortgage loan originator, and I can service your clients as well. I do both. And then you can go into explaining to them about what we do here at First Step. You may get somebody to refer you some business. You may get somebody that wants to also be a mortgage loan originator themselves, which is another reason why we're here. So you should definitely have those conversations. And especially on the heels of a great transaction where you just closed, they're going to want to service their clients that way as well. And it would be nice if they could actually do that. But in the meantime, they could be referring you deals to give their clients great service. Refinance deals. This is one of the best parts of being a mortgage loan originator, a piece that I never knew. So, I mean, I've been in the real estate business for 8 years as a realtor, and it never occurred to me that this loan, sometimes they're going to have to refinance that. And who better than the person that they trusted to get them the loan or get them the house? You're an originator now, so you need to be always staying top of mind and solving problems for people. It is the gift that keeps on giving. How do you stay top of mind? This is something that a lot of people struggle with, but you have to reach out to people and not just on a business side of things. You just need to reach out to people and show them that you care. Sometimes, a lot of times, refinancing solves the problem, but you never know if somebody has a problem unless you reach out to them and just check on them and see what's going on in life. So one thing that I like to do is what I call frog when I'm following up with my sphere. It's an acronym. So you check on them and you just frame the conversation in a sense of that acronym frog: family, recreation, occupation, and goals. So you reach in, you reach out to them, you talk to them, you figure out, hey, what's going on with your family? How's the family life? You can have good conversation following on that. And a lot of times they'll mirror your conversation and ask you about yours. So now you guys are getting closer. You're talking about their family. None of this is about, hey, I'm a loan officer. I would love to refinance your deal today. You can check on them and see, hey, what are you doing recreationally? How are you taking care of yourself? What are you doing? What do you do for fun? Have a great conversation about that. Let them know what you do. Occupation. Now we're starting to get into what is it that they do? How do they make money? How's your job going? And a lot of times they're going to ask you that back. So check in on their occupation and then check in on their goals. And in the goals, there's a lot of gold in those. So somebody could have a financial goal or want to purchase something or want to pay something off, and they may not understand that refinancing could be the answer to consolidate that debt. Refinancing could be the answer to pull some money out and renovate their home. Refinancing could give them the money that they need to buy another home. Maybe they want to become an investor. So having those conversations just about them in general allows you to understand if there's any problems that could be solved with a refinance. If it doesn't fit, then don't put the shoe on. But if it does, then pull that conversation out and help them figure out how a refinance is going to do that. And this happens in the current interest rate climate, which is higher than the previous few years. Um, People need to refinance all the time for many different reasons. So don't think you can't push that side of the business. And some people that just closed 2 years ago or a year and a half ago have pretty high interest rates. So you can always have the right conversations to bring that in. And you want to keep a healthy balance of refinances going because when the interest rates drop, it's going to get very busy on those side of things as well. So you want to be really good at those and having those right conversations. It's not all about interest rate right now. Sometimes people have other problems that need to be solved. Investors. This is where you can really start to grow your business is investors. Investors buy houses multiple times a year. Normal homeowners usually buy one home every 5 to 7 years. So you want to have a healthy balance of homeowners, but you also want to get you one or two good investors that are going to buy three, four, five houses a year. And on the front end, these short-term loans or renovation loans that the homeowner is going to use or that the investor is going to use, that's hard money. So we have a great program that we use. Um, you put that through Jonathan, just like you do with any other loan. And then at that point, you'll be able to have us using quick closes and hard money on those and making the same amount of money that you're doing on those on any other type of loan. Um, you need to start by having conversations with people. You could go to real estate investor meetings. You have to get out there and start talking to people. Nobody's just going to find you because you went and passed the test. You have to go speak to people, meet people, hear their problems, and start to solve their problems. Somebody who's an investor could be having a pain point with how fast their hard money closes or their responsiveness when they're under contract. These are areas where you could get in and let them know you have a great team. But you need to be around investors, and there's no better place than real estate investor meetings. You could even start your own real estate investor meeting and be the financing source that's there. There's really no rules to how you do this. You just need to start doing it. So just get out there and have more and more conversations with more people and start solving problems for people. And what do they need from you? They normally need speed. So you need to be responsive. You need to know what type of product that they're looking for, how much money they need, and they really need to close fast to be competitive in any market when they're putting out investor offers. The investor refinance. So let's just say you got somebody in a BRRRR where they buy the house, renovate the house, rent the house, and then the last R of that is to refinance into something like a DSCR or debt service coverage ratio loan. This is a huge thing for investors. They can now pull their money back out. They can get out of that short-term loan. They can now rent their property and stretch out the payment for 30 years. This is another way, but they're doing multiple refinances a year. So they need this. And even in any market, if they own a house that they are renovating, they have a short 9 to 12 month loan. They're going to need a refinance on the back end. So you end up doing two loans for that person in 1 year. And that's just going to help your pipeline be as strong as possible. Um, and again, they may need a refinance now, and then they may need to do it again in a year or 2 years or whenever the prepayment penalty is up. But you need to stay top of mind with these people. You need to be out trying to find them a deal for them to purchase, for them to renovate, and then for you to refinance. So you could get 2, 3 deals out of that. It's just a matter of putting in a little work and having those conversations with people. So didn't want to take up too much of you all's time today. Please don't hesitate to reach out if there's anything that you need as far as helping to build your business. That's what I'm here for. That's what we're here for as a team. Thank you so much. Have a great day.